Hello active traders, this is Ken Calhoun from TradeMastery.com with the YouTube channel that's dedicated to helping you become more successful in your trades, going for bigger winners more often. In this episode we're going to look at the vital importance of trading ranges when it comes to scanning for what's actually worth trading. So a lot of traders really make big mistakes by trading choppier charts that have lower profit potential and get stopped out. So let's take a look at how to do it a little more effectively with wide range strong charts. Coming up in just a minute. Now you might say I'm a really active trader. I've traded as much as $4 million worth of order flow in a single year. Here's screen cap proof from my Interactive Brokers account from a few years ago. So I've learned a few things along the way. And one of the most important when it comes to making bigger winning trades more often is that it's vitally important to trade instruments with wide trading ranges instead of compressed choppy charts, whether you're a day trader or a swing trader. For example, take a look at this swing trading chart behind me. What you'll notice is that I like charts with multiple points of range, a minimum of 10%, that's my 10% rule, 10% of price action range on a 15-day candlestick chart. So a $30 stock should have 3 points or more of range. A $50 stock should have 5 points of range. A $20 stock should have 2 points or more of range, and so on. That simple rule can help you greatly improve your scanning by focusing your energy on those charts that have the strongest price action and the best volatility. Now, one of the other things that's vitally important when it comes to scanning is to make sure that you're trading instruments with strong pre-existing uptrends at the point at which new volume is coming in where you're putting on the trade, or right before you put on the trade. The reason is you want to, kind of like a sponge soaking up water on the floor, you want the institutional buyers to dry up liquidity or to pull shares out of the market, which drives price up, right? It's simple supply and demand. The more scarce an instrument is because of recent buying volume, as evidenced by an uptrend continuation on increasing volume bars, the more likely that stock is to continue on in your favor as a trader. I found over many years that my best winning trades, my real money trades that have done the very best of thousands of trades, are those in which you have a very clearly defined reason for an entry with a nice wide range, and the chart's just, if it could yell out loud, it would say, buy me here, right? It's something where you've got volume, price action, and trend. Volume, high volume, good price action continuing up, and the trend directional strength is strong enough, increasing at the time that you put on the trade. We're likely to walk out of the trade a winner and put on a trade that doesn't go against you as soon as you get in. How many of you have ever traded as though it's kind of like an action movie? And you should not be trading like you're in one of these fast-paced machine gun, fast car action movies. As much as I like to watch those, or a superhero movie where you've got all this excited action going on. Professional trading is not exciting and dynamic. It's much more like being an accountant or a bookmaker or playing chess, where you figure out how to avoid getting in trouble with a move that you're about to make and do something different instead. It takes a lot of years to learn how to scan for the very best charts effectively, and one of the things that you may find in your own trading is that scanning is a challenge, or stocks that are breaking out to new multi-week breakouts like the type that you may have seen me teach about in my articles in Technical Analysis of Stocks and Commodities, Active Trader Magazine, Equities.com, and in my Money Show, Live Traders Expo appearances. You'll find that there's always kind of like a poker tell. You'll find that the very strongest, best charts to scan for are ones that have tight, well-defined patterns, kind of like a 45-degree angle uptrend in a tight channel. That brings me to a second tip when it comes to scanning. Make sure that you stay away from what I call fuzzy caterpillar charts, or charts that are up and down and all over the place with pullbacks. But I find that the simplest way to scan for charts is the best, where you're looking for perfect charts would be a 45-degree angle chart that looks like a piece of string that's been tied tight, right? Like Weight Watchers or NVIDIA was, or PPC, Pilgrim's Pride, other charts that have really good sustainable volatility. That's kind of the role model or the benchmark for scanning. When you're looking for trades that you're going to put on, whether it's day trading or swing trading, you want to find those type of charts. My biggest winning trades in my real money trade accounts have always been those that have the sustainable, strongest breakout signals at the time that I'm putting on the trade, still carefully managed with tight stops. So the takeaway from that tip is make sure that you're looking for charts that have as few pullbacks and as few choppy congestion zones as possible. When you're looking for cup patterns, one of my favorite strategies is to look for small cups. The smaller the cup, the better. Large cups mean by definition the left side of the cup was formed by virtue of a lot of sellers coming in. That's not good. You want charts where the selling is kind of incidental. You've got a very small pullback, so the depth of the cup should be relatively narrow. Less than half a point or a quarter point for a day trade, less than a point or two for the longer term swing trading charts. Charts that have big up and down moves are the worst charts to trade because traders will panic out of those at the first sign of trouble, and often you may be the trader that got in close to last on a breakout and then it goes against you. And if you've ever wondered why me, as all of us have as traders, right? We put on our trades and we always hope for the best but plan for the worst. And as a professional trader, I can tell you one of the most important takeaways is visual scanning for strongest continuous charts makes a lot more sense than over trading choppy charts. Remember, the market is so psychology driven. Iffy charts or choppy charts don't inspire confidence. It's just like when it comes to dealing with people. I like to deal with people who are honest with good authenticity, integrity, transparency, and reliability and consistency. They're people that I can trust to do what they say they're going to do, and they're honest and they're forthright and they do well and they try and contribute to the condition. They're part of the solution instead of part of the problem. Many of the educators out there are part of the problem because they overpromise and underdeliver. They'll say that you can make consistent big profits and make outrageous income claims without any tax return proof to back it up, and traders unfortunately get led down the garden path and blow up their trading accounts. And I inherit a lot of those recovering traders who've been misled by the educators out there who can't prove they really trade. Always best to learn from those of us who prove that we have made actual trades, and on top of that, make sure that you're learning from people that don't try and obscure trading approaches by using a lot of oscillation indicators and secret sauce, or proprietary black box scanners are particularly horrible and a waste of money. Just use simple, strong price action, volume, volatility, and directional trend strength. It's a very good common sense trading approach. That's why so many thousands of traders have trusted me over the years, since 1999 when I first started teaching people at my day trading university site. Now, Trade Mastery, as we're expanding our scope to cover even more for the world's active traders. So I look forward to seeing you in upcoming webinars, new videos to be posted regularly, and in my TradingTheOpen.com live room and Swing Scans alert service. So until next time, I'd appreciate if you thumbs up this video if you like it. Be sure to subscribe so you get more. And until next time, trade intelligently, trade with real tight stops, play the field, trade a handful of instruments. Let's go get them and do as well as you can, making bigger winning trades more often a way of life. Take care and best wishes for trading success.